This is the Asia Trade. I'm Paul Allen in Sydney.
I'm Avril Hong in Singapore. Your top stories this hour. Caution in the markets as U.S. stocks fail to gain traction ahead of next week's Fed decision and a delayed inflation reading due later. Vladimir Putin gets a warm welcome from India's Narendra Modi on his first visit since the 2022 invasion of Ukraine, finalizing a nuclear-powered submarine deal. And Meta shares jump as Bloomberg reveals Mark Zuckerberg's planning to scale back spending on his metaverse project.
OK, we've just opened for trade here in Australia, final trading day of the week, and we've got a flat open at the moment on the ASX. A couple of things to watch out for, though. We're looking at Rio shares a bit weaker, off by 1.7%. We did hear from the CEO, Simon Trott, making some remarks on his first Capital Markets Day in charge, talking about slimming the company down. We saw some big gains for Rio yesterday, but it's just pairing some of those at the moment. Looks like we're setting up for a very positive day in Japan, however. Nikkei futures currently better by 1.4%. We did have a 30-year bond auction go better than expected again yesterday in Japan. That was the best since 2019. The bid to cover ratio was well above the 10-month average. We did see the 10-year sell off a little bit, though, yesterday. A bit of curve flattening in Japan. No change for the yen at the moment. And we are closely watching the offshore yuan in China as expectations among the market and market watchers as well keep on growing that there is potentially a need for the RMB to appreciate. Avril.
Yeah, you talk about that curve flattening in Japan. It's interesting also how we saw that pressure come in on treasuries. And this is against the backdrop of jobless claims dropping in the U.S. to their lowest level since 2022. And they also came in below estimates. So we are seeing stocks, yes, they are not far from all-time highs, but there's not a lot of conviction in all this ahead of the FOMC next week. And it's also worth noting that the jobless claims data might have experienced a bit of distortion because of the holidays. What's also interesting in terms of stocks, you take a look at this chart on the right, it shows you this small cap tech stocks. They've been lagging the Russell 2000s, which of course has been experiencing and benefiting from the rotation into smaller cap stocks. So the extent in which all this likely provides room for small tech to catch up is something worth considering. Also hearing from U.S. Supreme Court decisions, they have cleared Texas to use a new Republican-drawn congressional map for next year's election. And this is bolstering GOP hopes of picking up as many as 5 new House seats in the state. And of course, this is a decision that we have been watching out for ahead of the election next year. Paul?
Thanks, Avril. Just a quick correction there. Nikkei futures actually slightly negative. We were looking at the last session on close there a moment ago. So I'll take it all back. Maybe we're not setting up for a positive session in Japan. But let's get a little bit more now on some of the market action that we've seen. Katy, Kaminski, Chief Research Strategist and Portfolio Manager at AlphaSimplex Group, joins us now. So, Katy, I just want to get your view on some of the action that we've seen in the US, particularly this rotation away from big tech, some of these really pricey AI names into some of the smaller mid-caps. What do you see driving this trend, and do you think it's going to endure?
This is a good point. We've seen a definite dispersion between the typical AI narrative. We've seen small caps strongly outperforming AI and large big tech stocks. And I think this really has to do that there's still a little bit of reticence about the valuations in AI. And you also have rate cuts, which somehow has been, hopes for rate cuts, which has boosted small cap a little bit as well. So I'd say it is a trend that's reconverging, but it's something we're definitely watching.
And do you see potentially this rotation broadening as well? Because we've seen other areas of the market that have seen a very impressive run-up this year, particularly around gold, precious metals as well. But, of course, these things offer no return. Is it perhaps time to take some profit, or do you see the rally continuing as the Fed moves to ease?
So I think this is a really good point. We have seen continued momentum in the equity market, but a little bit of bifurcation in that you're seeing other themes kind of coming out of the recent drawdown that we had, this recent pullback, a little bit stronger. I think the big challenges are really going to be watching the Fed rate cut potential meeting next week. And of course, I think Asia is definitely on my radar, just given, the recent situation with the BOJ and the potential for hikes. So I think there is a little bit of uncertainty that things might shuffle around, especially as you see such different monetary policy and different moves across the globe right now.
What are you seeing as the market implications for if the BOJ hikes, given maybe they've learned their lesson from last year? You look at stocks as well. Volatility has come down for Japan equities.
This is actually very much on my radar because you have seen a pretty strong steepening in the Japanese yield curve, and you've seen higher inflation numbers that could be concerning. Plus, you also have this disconnect between goals for the new PM with the BOJ. So I think that kind of highlights a very complex situation where if they do hike, that could cause some contagion, particularly with the yen as one of the key currencies for the carry trade. So I think the fact that it's such a different policy and that it's so interconnected definitely is on my radar for the next 2 weeks or so.
How much wiggle room or breathing room do you think the Fed might give the BOJ? And what is it going to signal next week, you think?
Well, I think, if you look at expectations, the general expectations are that we will have a rate cut. I think that feels very much baked in, although there's still some uncertainty about the overall direction of the Fed over the next few months. I think the fact that this is happening a week before the BOJ could set us up for a little bit of a surprise if we do actually see a hike for the first time in quite a while in Japan. So I think the fact that that's moving in a different direction and that there's been pretty strong trends that rely on things like carry versus the yen is something that could potentially cause a rotation and a potential sell-off.
Yeah, Katy, I'd like to get a little bit more on that thought as well. I mean, we do have a chart here that illustrates the somewhat wild ride that the yen has been on recently. How do you see this currency pair tracking dollar-yen as the Fed looks to ease and the Bank of Japan looks to tighten? And what are the implications for carry?
Well, I think the key issue is that, yen is often the funding currency for carry trades. And if you see moving in both opposite directions with the U.S. cutting rates and Japan raising rates, you're kind of moving simultaneously against the steady state of where we were with the particular carry trade. And as you know, that's a trade that sometimes when it unwinds can cause a lot of volatility. We definitely saw that when Japan moved from zero rates to having positive rates, and we're anticipating that we might see something similar again. Couple that with the Fed cutting rates, it's definitely something to watch.
Okay, so keeping our eyes peeled for any possible ructions. But in terms of AI and market leadership, what's interesting for U.S. stocks, we've been seeing this rotation this week into smaller caps, right? There seems to be some sense of space for smaller cap tech to catch up. What might this mean for Asia?
I mean, that's a good question because you are seeing, Chinese stocks have still done very well. You've seen positive across, most regions in Asia. So I think there are some knock-on effects for potential other tech opportunities. And there's really been a sort of a general, the tide lifts all boats kind of view with equities, despite some of the concerns. So I think there will be pockets of opportunity that come similar to what you've seen in the U.S., a little bit of a chance for rotation, different opportunities than just, sort of a narrow, large big tech AI theme.
All right, Katy Kaminski, Chief Research Strategist and Portfolio Manager at AlphaSimplex Group. Thanks so much for joining us. Just want to get you across a couple of stocks that are moving here in Australia. We'll start with Rio Tinto. We did hear from the new CEO, Simon Trott, yesterday, making some remarks on Capital Markets Day. This is his first Capital Markets Day as CEO. Talked about the need to trim costs, slim down the operation, focus on iron ore and copper, and take a more phased approach to lithium. We're seeing seeing Rio losing a bit of ground today, off by 1.25%, although we did see a big run-up on Thursday of almost 4% in anticipation of those remarks. Watching ANZ as well, the Australian Shareholders Association is recommending that the ANZ chair, Paul O'Sullivan, not be re-elected due to, quote, serious events under his leadership. This is obviously referring to a whole string of incidents which resulted in regulatory penalties, extra capital requirements for the bank as well. ANZ losing a little bit of ground there, off 0.75%. The AGM, where Paul O'Sullivan will learn his fate, happens on December the 18th, Avril.
Paul, also coming up on the program, we'll assess the state of the U.S. economy with the Conference Board ahead of next week's Fed decision, and we preview today's likely RBI rate cut with Emkay Global. Much more ahead. This is Bloomberg.
Indian Prime Minister Narendra Modi has rolled out the red carpet for Vladimir Putin, showcasing a relationship that has angered the US and led to hefty trade tariffs. The Russian president is visiting New Delhi for the first time since ordering the full-scale invasion of Ukraine. Let's bring in Bloomberg's Michael Heath for more on this. So, Mike, as I mentioned, Putin getting the red carpet treatment in Delhi. Nobody seems too bothered about the optics here.
No, I mean, it's a fine line. On one hand, they need to walk because, as you mentioned, this angering of the US over India's oil purchases from Russia. But by the same token, this is a long-term relationship, and both sides are pretty keen to show a degree of independence there. India's always sort of wanted to have this strategic autonomy, and Russia or the Soviet Union have always been part of that. And Vladimir Putin wants to show that, while he's sort of locked out of the West, there's plenty of other major powers that are ready to welcome him. So they have a bit to gain. I mean, but as you say, the interesting point is sort of how the US might react to this. Depends if there are any deals signed. Bloomberg's been reporting that there's going to be the leasing of a Russian nuclear submarine. And then there's talk of also, some trade, India trying to increase exports to Russia. So it sort of depends what comes out of it and how President Trump sort of is reacting, because he's been quite pro-Putin lately. So whether that makes much difference to him, we'll sort of have to see there.
Mike, what is the consideration for India, especially, we have the submarine deal, but it's also coming at a time where India's military capabilities could use some reinvigoration?
Yeah, Avril, I mean, there've been some references to perhaps India buying the latest version of Russia's air defence system with the S-500. There's been a few iterations of that, the S-300, the S-400. And one of those variants, India used quite successfully in its skirmish with Pakistan in May. There was a low-level conflict there. And they also aircraft as well. So India would like to bolster that. Now, whether it goes on and buys a lot of equipment from Russia, it hasn't done a huge deal with Russia for quite some time. It's sort of been more inclining towards the West. And a lot of that Russian weaponry is Soviet holdover sort of stuff, so it's becoming a bit dated. So we really just sort of have to see how that goes. But certainly India's expanding its military footprint. Even the leasing of that nuclear submarine is basically a training, because India's going to build its own indigenous nuclear-powered attack submarines. So that sort of side of it's all progressing. I mean, India is the most populous country in the world. It is a growing power, and its military will expand presumably to fit that. It just depends whether it buys that from Russia or whether, as part of its trade negotiations with the US, it ends up opting maybe to buy more US material as a way to as a sort of sop to President Trump.
Mike, always great to get your analysis. Thank you so much. Bloomberg's Michael Heath. While Putin is in India, the French President Emmanuel Macron is in China for a 3-day state visit. Macron pushed for more Chinese investment as it looks to rebalance its economic ties with Beijing. President Xi said China is willing to import more high-quality French products, welcomes more French enterprises to develop in China.
中方一同法方一道， China is ready to work with France, always bearing in mind the fundamental interests of our peoples and the long-term interests of the international community, to overcome various disturbances, adhere to dialogue on an equal footing and open cooperation, ensure that the China-France comprehensive strategic partnership moves forward more steadily and effectively in the next 60 years.
Let's bring in our China correspondent, Min Lo, in Hong Kong. So, Min, what's your read into how the meeting went?
Yeah, I mean, you listened to President Xi's remarks earlier, and I think the tone has been pretty neutral. And in fact, on Chinese state media, there has been many editorials covering this event, the state visit by Macron. And overall, the tone has been pretty positive, I would say. And President Xi himself described the talks as being frank and candid and fruitful. There has been a wide range of cooperation agreements being signed in many different areas, ranging from education to natural resources, to agriculture and food and so on. But I think the key emphasis for China, at least from the state media readouts and editorials I've been seeing, has been more strategic rather than tactical. Yes, there's been talk about trade and cooperation, but a key focus has been really to enlist France as a partner to work towards China's vision of an equal and inclusive international order, especially highlighting how France is a permanent member of the UN Security Council, how it's going to take over the leadership of the G7 as well, and also highlighting how France has in the past been calling for strategic autonomy, and China is saying cooperation with France and between France and China will be a good way to enhance France's and the EU's resilience.
Min, it's also interesting about what we're not hearing. Not a tremendous amount of news flow on thorny issues like the Japan-Taiwan dispute, Ukraine either. What are we to make of that?
Yes, well, Taiwan has been a major focus for China because on the eve of the meeting between Macron and Xi, Chinese Foreign Minister Wang Yi met with his French counterpart in Beijing and had called on France to support China on their stance on Taiwan. But of course, Macron so far in the trip did not mention anything on Taiwan, which shows you that he really doesn't want to wade into this controversy here and want to avoid anything that could anger China. And we have heard French officials calling for the status quo. He did talk about the Ukraine war, though. Macron calling on China to cooperate further on the Ukraine war, to which China said that, yes, they will support a binding peace agreement between the two sides, but China hit back at any what it's calling irresponsible accusations of China, referencing some of these Western accusations that China has been siding with Russia.
We both realize how serious the situation and the need to have a solid and sustainable peace. You know how much France has committed to that. I wish we can reinforce our cooperation on this. As members of the Security Council of the United Nations, we have a responsibility and we need to do everything we can to find compromises.
So geopolitics aside, Macron also talked about wanting to see more investments from China. And China did say that he hopes, President Xi said he hopes that, that France will provide a more friendly business environment for China businesses as well.
Min, what about China, once again rejecting Takaichi's latest affirmation on her Taiwan stance, as you alluded to?
That's right, and this happened just on Wednesday. Takaichi mentioning in a parliamentary session again, and this time reaffirming that Japan's Taiwan stance has not changed since the 1972 joint communique between China and Japan. Now, that communique talked about respecting China's, respecting how Taiwan is an inalienable part of China, but it stopped short of affirming to that one China principle. And so this answer has not been satisfactory to China. The Chinese Foreign Ministry yesterday again hitting back at those comments from Takaichi, saying that why isn't Japan clearly articulating its commitment that it has made and its legal obligations. So we're still seeing this spat between the two sides continuing to escalate.
All right, Bloomberg's China correspondent Min Min Lo there. We have more ahead on the Asia trade. This is Bloomberg. Bloomberg has learned that Meta's Mark Zuckerberg is expected to cut resources for building the so-called metaverse. According to sources, executives are considering budget reductions of up to 30% next year. Let's get to Bloomberg tech and business reporter Kurt Wagner. Kurt, this is really interesting. The metaverse was meant to be the future for Meta, the company formerly known as Facebook. And on this news, we got shares up 3.4%. It's fair to say there's a bit of tension here about what the company wants to be and what the shareholders want it to be.
Yeah, well, you think about when Meta first announced the metaverse was back in 2021, and a lot has happened in those 4 years, not only at Meta, but kind of industry-wide, right? The rise of AI and LLMs and building data centers and all these things, but also the success of Meta's AI smart glasses, the Ray-Ban Metas. They just unveiled or announced some display AI glasses as well. So I think what we've seen is not only a lackluster sort of interest in the metaverse, but we've seen a lot more interest in other very expensive things. And I think this is a reflection of both of those. They're winding down some of that investment in the metaverse because they are going to move it into other things that feel like they're more urgent for them.
So maybe investors rewarding Meta for being able to adjust and pivot. What is your sense of the futuristic projects that will benefit from this, given how we see a freeing up of resources?
Yeah, so the company actually this afternoon confirmed, not the specifics around the 30% that we reported, but did confirm that they are going to be moving some of the resources that were toward the metaverse, more toward their AI wearables. So again, think of those Meta Ray-Ban glasses. I think that's the ultimate goal. They've talked about sort of people walking around wearing those glasses almost as a replacement for their smartphone, right? You're now wearing your phone on your face instead of keeping it in your pocket. And so I think that's going to be probably the biggest beneficiary of these metaverse cuts.
Bloomberg tech and business reporter on The Scoop, Kurt Wagner. Thank you so much. Now to the latest from the corporate front. Blue Owl Capital has raised $1.7 billion for its latest digital infrastructure fund, about a year after acquiring a data center specialist. Its digital infrastructure trust also picked up interest in 11 U.S. data centers from affiliated entities in a deal valued at $1.5 billion. The firm is making an aggressive push into the space, providing more than $50 billion in data center financing to Meta and Oracle. Bloomberg sources say cloud computing startup FluidStack is in talks for a funding round that would value the company at $7 billion. Situational Awareness, an investment firm founded by ex-OpenAI researcher Leopold Aschenbrenner, is in talks to lead the financing, with FluidStack looking to raise $700 million. Sources say Google and Goldman Sachs are also involved. And Bloomberg has learned Jane Street's record trading boom this year has been fueled by smart bets on AI, particularly tied to Anthropic. Sources say Jane Street's investments in private companies and funds lifted third-quarter trading revenue by about $830 million, with Anthropic accounting for most of those gains. Jane Street's on pace for its best year ever, leapfrogging many Wall Street rivals. We have more ahead on the Asia trade. This is Bloomberg. You're watching the Asia trade. Let's take a look at how FX is faring. Of course, the softness of the dollar is in focus and the continued expectations of what the FOMC and following that, the trajectory of the Fed is going to look like, looking at the yen as well. And we are seeing it at the 155 level. So that continued gain, perhaps a bit of a stumble for the moment when it comes to the Japanese currency. Now, what's really interesting also as we get data out of Japan, household spending is actually coming in 3% down. And this is versus the prior reading of an expectation well, the prior reading was a gain of 1.8%. The expectation in terms of the survey was also some gain. So does this put some questions around the BOJ's hikes? The household spending doesn't look quite that strong. Of course, this is coming against the backdrop of seeming support for a hike from the BOJ. We have key members of the Takaichi government saying that, according to sources, they wouldn't try to stop the BOJ if it tries to hike rates in 2 weeks. Let's bring in Bloomberg's chief FX and rates correspondent, Ruth Carson. So, Ruth, dollar yen very much in focus, but we are getting the sort of messaging. Maybe this data from household spending is a bit of a stumbling block, but the messaging from policymakers seems to be edging us towards a hike.
Absolutely. Markets are definitely reading it that way. And if we run the WIRP function on the terminal, we can see, particularly with swaps traders, the expectation overwhelmingly is for a hike this in the next week or so. Now, compare this to even this time last week, and it's definitely moved forward. So, yes, there seems to be a lot of support from policymakers as well as the authorities. Markets are certainly taking it in stride, and we can see it. We can see it in dollar-yen trading. It is, as you said, Avril, at around the 155 level. A couple of weeks ago, it was around 157 when we were talking about potential intervention. So watch this space, but definitely every single data point will be passed by the traders going into the BOJ decision.
Well, Ruth, the yen is, of course, the third most traded currency in the world. So in terms of its direction of travel, what are some of the top banks predicting for 2026?
Yeah, I can't believe it's December already, but here we are and everyone is talking about the outlooks. Now, it's interesting when you run the FXFC function on the terminal, there is a huge spread between, the lowest dollar yen as well as the highest dollar yen forecasts out there. I think it is around 138. All the way through to 160, huge range. But it just shows how divided people are on everything from the BOJ's policy path through to expectations on the dollar. Because we have to remember that when it comes to currencies, it's always not just one side. It's a two-side game to things. But in terms of where we are right now, 155 definitely in the higher end of expectations. But who knows? All it would need would potentially be a huge risk-off event, maybe a repeat to April 2nd or something else to actually jolt, the yen a lot higher from here.
Ruth, also interesting how, given the dollar softness, RBI intervention, or what we know so far about how policymakers have been dipping into markets, it's a rupee that is still hovering those record lows. To what extent might the rate cut trajectory put further pressure on the currency?
Yeah, it is one of those central banks that we know are alive in Asia, and it is a fascinating currency to look at because it's seemingly that every day we are testing a brand new low to the rupee, and we saw a bit of a bounce back yesterday, but is that going to stick? Talking to traders out there, may not be so. We know that India has the biggest tariffs from the US among Asian peers, so definitely watch the space going into the RBI decision today.
All right, Chief FX Rates correspondent Ruth Carson there. Well, Japanese lender Aozora Bank has carved out a niche by financing leveraged buyouts at a time when Japan's seeing a surge in deal-making. M&A in dollar terms is set to reach the second highest level on record this year. CEO Hideto Oomi told us he expects more opportunities as Japanese firms address governance reform.
I believe the trend will continue. For over 30 years, amid Japan's economic stagnation, the government and the Bank of Japan have implemented various measures to revitalise the economy, including the Corporate Governance Code and Tokyo Stock Exchange reform. These are finally starting to show results and gain momentum. The trend won't stop. I believe it will continue next year too.
You touched upon corporate governance reform, but I'd like to delve a bit deeper into next year's outlook. What kind of M&As do you think will increase? The number of MBOs is also rising.
There are almost no top managers who are not paying attention to capital efficiency. Everyone is seriously discussing what their company should be, both in management or within the boards. This could mean an M&A, going private or other approaches. So I believe we'll see a broad range of these options emerge this year, with some existing ones expanding further.
Moving on to LBO acquisition financing, your bank's loan balance increased significantly in the previous earnings report. The balance is increasing. I believe many banks are doing this. But do you perceive any challenges or issues in the market?
LBO loans have existed for some time, but since the capital cost reforms began, the number of deals has increased. There's also a slight trend towards larger deals. In that sense, it's a question whether the banks currently offering this financing can respond to the demand. It's not just us. We need to support and encourage the improvement of Japan's capital markets, but also broadening the base a bit more.
I'd like you to elaborate a bit more on this part about broadening the base. The issues are quite limited, and there's also the secondary market discussion. How do you think we should ideally broaden the base?
Both, actually. We must broaden participation even as we issue, and we also need participants entering through syndication and secondary markets. Until now, it was often the case that a limited number of banks acted as primary underwriters. But to broaden this, I believe it's crucial to establish a system that allows those who haven't focused much on this area yet, but are looking to get involved, to participate effectively.
When it comes to LBO, Aozora Bank has been quite a pioneer in Japan since the early days of this market. Could you tell us a bit about how you plan to approach this current booming market?
January 4th next year marks exactly 25 years since we became Aozora Bank. This LBO loan business, along with structured finance in general, was a field we worked in from the start. During this time, we've handled numerous deals, many successes and failures. Myself and a lot of employees have extensive experience. I believe it's necessary for us to vigorously drive the growth of this market while also maintaining a certain level of discipline to foster a healthy market.
You mentioned a disciplined, healthy market. Regional banks are increasingly participating in this field. What can Aozora do in relation to these regional banks?
We've already worked with several banks. They come to our bank as trainees. It's a case of learning by doing. They participate as members of the deal team, handling the actual case. After that, they return to their local bank, and when we do a syndication, we can communicate using the same language and mindset. Also, when similar LBO-type projects arise locally, we participate and work together. I believe that developing this kind of relationship will contribute to the growth of the market.
Aozora Bank CEO Hideto Oomi speaking with Bloomberg's Hideki Suzuki. And Bloomberg has just launched its new Japanese website. Visit bloomberg.com/JP for more exclusive Japanese language reporting and curated features from our global newsroom. We have more ahead on the Asia trade. This is Bloomberg.
Well, applications for US jobless claims fell last week to the lowest level in more than 3 years. There was a 27,000 drop for the week ending November 29. The expectation was for a modest increase. It does suggest employers are largely holding on to workers despite a wave of recent layoff announcements. In November, those layoffs hit the highest in 3 years, although it is possible that that data was affected by a holiday-shortened Thanksgiving weekend. So we got markets now looking ahead to the next key piece of data, and that is the inflation reading, which we will get on Friday. We're joined now by Dana Peterson, the conference board chief economist. Dana, I do want to start off with the jobs data that I just mentioned there. Do you see a seasonal impact weighing here, or can you see a longer-term trend in these numbers?
Well, there could be a seasonal impact, although the Department of Labor tries very hard to seasonally adjust for holidays. But Thanksgiving's pretty difficult because it moves around. It's not always in the same day or even week. So that could be part of the issue. But for the most part, jobless claims have remained quite low. And that's because many companies are not letting people go due to labor shortages, immigration policy, and also just a lot of uncertainty.
Yeah, in terms of uncertainty, we're still sort of navigating our way through the fog of all that US shutdown-inspired data confusion. So we're going to get delayed inflation numbers tomorrow out of the US as well. What are you expecting? And do you think it's going to change the narrative at all around what seems to be an almost certain cut from the Fed next week?
Well, unless there's something truly surprising, like a big surge in inflation overall, or even core or super core, I don't think the Fed's going to change its course. Most likely, they're going to go ahead and cut interest rates, even though they don't have October data, and they certainly don't have much data for November. Leading up to the shutdown, they were concerned about downside risks to the labor market. And indeed, we do believe inflation is probably going to continue to rise, especially for goods that are negatively impacted by tariffs. And that's probably going to continue over the next few months because it takes a little time for it to seep into, to go from the shipper to the manufacturer to the wholesaler to the consumer. And so there's still a lot of downside. And certainly if businesses, we've heard a lot of layoff announcements. We don't know when they're going to happen. And some of them make sense. You know, they are tech firms looking to AI and looking at different businesses, as well as finance, which has been consolidating for a while. But we do see that there is some weakness there in terms of the outlook. And I think the Fed is going to want to get ahead of that. And so even while inflation probably may remain sticky tomorrow, the labor market issues are still out there.
To your point about things taking a few more months to give us a fuller picture, what does that mean for how dovish the Fed might be in the first half of next year?
Well, again, it's mainly about the labor market. And if they start seeing the unemployment rate rising very aggressively, because companies are not hiring, they're not letting people go, but they're also not hiring, then that's a huge negative for consumption. Consumers will feel like their job prospects are worse. Indeed, we had a big drop in our labor market current and future expectations in our consumer confidence measure for the U.S., and that starts to become a reality. Then the Fed is going to be much more worried, and they'll be more concerned about stabilizing the economy and making sure that we don't go into a deeper slowdown or even a recession.
That the dynamic you speak of, no fire, no hire. Talk to us about that consumption past week or so in terms of what we saw Black Friday, Cyber Monday. Does that provide a bit of comfort, you think, for the consumption picture in the U.S.?
Not really, because a lot of that's buying of retail goods, but not much in the way of services. So we still don't know what the services picture looks like. We'll know tomorrow for September, but certainly not for October or even November and these Black Friday sales. And the other thing is, we know from our holiday survey that many consumers said that their most important thing is getting the most for their dollar and finding discounts and sales. And so the best place and time to get those discounts is Black Friday. So it could be the case that people bought whatever they were going to buy last week and they're done. And we could see slowing in consumption going forward. Or it could continue to rise. But we don't know. We don't have that information. We have to wait until those data are released.
Yeah, a lot depends on that delayed data. But, I mean, in terms of that, what's the risk we could see another shutdown at the end of January? It's definitely a live question. And what's that going to mean for Fed decisions and business decisions as well going through to 2026?
Well, there is a risk that we could have another shutdown in January. But it all depends on how long that shutdown lasts and whether or not the data agencies have caught up, because they're 2 months behind. And it takes time not only to field the data, but to clean it and make sure it's ready for public consumption. So if it is the case that we face another shutdown and the Fed's in the dark again, they may actually decide to just kind of pause and wait and see. But again, it's going to depend upon the data that we have. And we're going to get some fourth quarter data by the time January comes in. And if we see weakness in the labor market that can't be explained by tariffs that can be explained by tariffs and what that means for businesses looking to cut workers, then the Fed will probably go ahead and continue cutting interest rates. But again, there's just so much in terms of uncertainty with respect to when we're going to get these data and whether or not we're going to have another fiscal event that will prevent the Fed from knowing what's truly going on in the economy.
On the labor market, Dana, what do we know so far about the impact from AI in terms of productivity enhancement on one hand and perhaps some retrenchments on the other?
I think that, a lot of the excitement about AI is probably a little overwrought. Many companies are still in the experimentation phase. Some companies aren't even experimenting yet. They're just trying to figure out what tools they want to invest in, because these are huge investments. And not only in terms of buying the tool, but also having the proper infrastructure and also making sure that your workers know how to use these new tools. And so I think that the tech sector is definitely far ahead of the curve, but most companies are still trying to figure things out. So there's probably not much in the way of great productivity production or even that you can measure. And certainly when it comes to return on investment, again, it's very hard to know right now whether or not AI is making companies actually lower costs through fewer workers or more efficiency. So the jury's still out, but it is a focus. I think most companies are afraid of getting behind the curve. And so they are looking at what kinds of AI they can use and how which occupations within their companies can become more productive or even rendered redundant with this tool.
Dana, thank you very much for your insights and your time in what I'm sure is a very busy period for you. Dana Peterson is chief economist at the Conference Board. We have more ahead on the Asia trade. This is Bloomberg. You're watching the Asia trade. Alphabet investors are increasingly confident the company's chips could become a major driver of revenue for Google's parent. D.A. Davidson says Alphabet could capture 20% of the AI market over the next few years if it gets serious about selling its tensor processing units, or TPUs. That would make it a roughly $900 billion business. The success of TPU chips is a key reason for the stock's 30% rally in the fourth quarter, putting it among the best performers in the S&P 500, Paul.
Well, the hunt is on for new Asian equity winners from the AI trade as technological shifts and bubble fears reshape the investment universe. Let's get to Bloomberg Asia equities reporter Sangmi Cha now. So, Sangmi, tell us why the shift? What's driving this?
That's right, Paul. When there's a gold rush, there's a saying that sell shovels, right? What's happening in Asia is investors are looking for the suppliers that make this shovel. So we were always focused when it comes to Asia AI trades on these big heavyweight stocks like the TSMC, SK Hynix, and Samsung. We're not saying these established names are done, of course, because they continue to make high bandwidth memory, and the foundry for chips are only going to be more important. But what we're seeing here is more of a broadening out of this trade into some of these lesser known and smaller cap names in Taiwan, in Korea, Thailand, and even mainland China. And some of these companies have seen massive moves when exactly Google came up with this upgraded Gemini 3 last week. And we were able to also see some of that rotation because we saw that SoftBank, which is very closely connected to NVIDIA chips, which supplies to the ChatGPT from OpenAI, has actually slumped close to 50% in November alone. That's the worst year in many, many years, over 25 years, actually. So, and we have seen TSMC and SK Hynix also fall 4% in November.
Sang-mi, what are some of these investment opportunities to trade the next AI theme for the region?
Investors are saying that some of these lesser-known names, exactly like MediaTek, that's located in Taiwan, and Zhongji Inolight, which is the Chinese company that makes that works with Google and NVIDIA. It actually, the revenue, 22% of its revenue comes from Alphabet, and 11% comes from Amazon. So any of that rivalry in the AI accelerators will actually boost their shares. And there's a company called Isu Pitasis in Korea that makes the printed circuit boards for Google as well. So again, it stems back to the idea of not just GPUs fueling the AI rally, but the TPUs from Google here.
Well, we've got a great case study today as well. Sang-mi, more Threads making its debut after a pretty decent IPO. Can you tell us a little bit about the excitement around this stock?
That's correct. So we have the More Thread, which is the second largest IPO onshore. And of course, all this interest is coming from the self-reliance theme in China. So just like the whole world is talking about the AI trade over in China, because they have no access to the highly advanced chips from NVIDIA, it is just fueling those self-sufficiency within the country. And so we have seen the likes of Cambridge all just wanting to be those NVIDIA wannabes. But for More Thread, it is actually, there's a lot of interest because the founder herself comes from an ex-NVIDIA employee. So we're going to be seeing how it does today on the first day of the debut.
Sang-mi, thank you so much. Bloomberg Asia Equities reporter Sang-mi Cha. Now let's take a look at how futures are shaping up, pointing to declines despite a fairly solid day on Wall Street. That's what you're seeing on the Nikkei futures. We'll track the market opens in Seoul and Tokyo next. This is Bloomberg.
This is the Asia Trade. We are counting down to Asia's major market opens. And Avril, we saw US stocks eke out some pretty modest gains in that session. We got slightly better than expected jobs numbers, but this rotation away from those big tech names into smaller and mid caps seems to be becoming something of a trend.
Yeah, I think the jobless claims not as bad as some investors had worried about. So maybe we see a bit of that tailwind in terms of the expectations of what this means for the Fed. And of course, it's interesting, despite that stock bounce that we saw, it wasn't really coming with a lot of conviction. So maybe that also influences trade in Asia today.
We're about to find out. Here is the market open for Japan and South Korea. And, wow, seeing some pretty good gains from the Nikkei out of the gate. So that reversed quickly. We're down 1%. OK. We're going to be keeping a close eye on a number of those tech names as well in terms of what happens with the rotation. We're looking at the yen. Not a lot of change there, 155. But we've been watching those Japanese JGBs pretty closely also. We saw the yield on the 10-year moving. The 10-year sold off quite a little bit yesterday. The curve flattened, and we had another robust 30-year bond auction, better than expected. We saw the highest interest since 2019. Of course, we are counting down to the Bank of Japan meeting later this month, where there was a very strong expectation we are going to see some tightening. We also heard from, or rather we didn't hear from some government officials. It appears there's not going to be any resistance to that tightening move from the BOJ by Sanaya Takaichi's government. Let's take a look at what's happening in Korea. Meanwhile, we had some current account data out of Korea a little bit earlier on. The Kospi at the moment pretty much flat. Very modest gains for the Kosdaq as well. Although a couple of those big names, we're looking at SK Hynix and Samsung. We're seeing Samsung gaining at the moment, about 0.25%. Narrow losses for SK Hynix, off a little bit more than 1% right now. Some brokers think that these stocks could be facing a little bit of pressure today. The DigiTimes reporting yesterday that both those companies are planning to increase their DRAM production growth targets, Avril.
Yeah, you talk about that rotation earlier. How much do we see that further broadening out, or that rotation for smaller cap U.S. stocks? We're looking at a bit of tepidness on the U.S. futures, but of course they almost were at those all-time highs overnight. Tech was not what led the rebound. That being said, take a look at where we are on the U.S. 10-year yield. We are pushing towards that 410 level. Also cognizant of what we got out of Japan, that curve flattening. And interesting, we saw that demand for the 30-year auction and the pickup on the long end just a day ago. Oil not really giving us that much direction, and we are seeing the dollar hitting fresh one-month lows. Now, let's unpack all this. Our next guest believes the U.S. AI rollout should work in Asia's favor. It's also that time of year when Saxo releases its annual tongue-in-cheek outrageous predictions. Charu Chanana, Chief Investment Strategist at Saxo, joins us now. So, Charu, we'll get to your predictions in just a bit. But talk to us about why you think maybe next year will be even better for risk and Asia in particular.
Yeah, absolutely. Okay, so let's take the broader picture first. It does seem like we're getting that rate cut from the Fed, and then going into next year, if at all, the probability seems to be getting higher for an asset-led Fed, and that does mean that we could get some more rate cuts going into next year. I mean, of course, the market's already looking at 3 rate cuts for next year. I've seen predictions of about 100 basis points of rate cuts as well. So about 3 to 4 rate cuts next year looks very, very likely. And on top of that, of course, the tech volatility has gone up, but that has not really kind of questioned the kind of capex that has been going on in this AI theme, right? If that continues, especially from the big, hyperscalers that do have the ability to in some ways fund it as well, I do think, of course, the dispersion would continue and the broadening of the AI theme would continue in the US. But overall, both of these macro dynamics are extremely positive for Asia, because if we do get that continued AI capex, the hardware backbone of that AI cycle really rests in Asia. I mean, we've seen that theme play out in Taiwan and Korea. I think it could spread out to some of the other names as well, beyond the big names that have already rallied quite strongly this year. Japan has been a huge participation in Asia. And as I think with the volatility in tech, as investors look to kind of shift away from hype to the real fundamentals, I think the real fundamentals are in Asia. When the US hyperscalers continue to spend with really little insights into where they monetize it, I think that spending continues to benefit Asia, who do continue to get strong order books on the back of that spending. And then you club that with Fed rate cuts, a softer dollar potentially, all of those are very positive for Asia.
On the Fed rate cuts, you say 3 or 4 next year. How much does it matter whether we see this first half or second half? And to what extent is it realistic to expect a very dovish Fed under potentially a Fed chair Hassett?
Yes.
Given he's one man, there are other people on the board, right?
Exactly. And I think we will start to get a reflection of that within this month as well, as to how divided the Fed board is getting. We've already got some meetings where we've seen that division play out. But certainly, I think this December meeting is even more important, because we still have a kind of a data blackout. Even though the government shutdown is over, we haven't had the most recent data for the Fed to really judge about, where things are going. We've had obviously some political influence playing a part as well. So the division is certainly, getting much more starker within the Fed, and that will be a theme going into next year as well. But I think within the first half of the year, even if we do not substantially get those rate cuts, certainly depending on where the labor market is going, I think there is a chance that we might get another one at the end of the first quarter if the trend in the labor market sustains to point towards more weakness. But I think the market obviously reacts a little bit, faster than the actual rate cut itself. So I think that potential expectations of rate cuts would also continue to support the markets.
Charu, do you see dollar weakness becoming a major theme in 2026 as we see divergence between major central banks, particularly the Fed, and how's that informing your investment strategy?
It certainly seems like, we've obviously seen a lot of the dollar weakness this year as well. But going into next year, I think it'll be a dual story of both, yes, the Fed rate cuts, but also with those Fed rate cuts, I think the fiscal situation in the U.S. will also continue to play a big part. I think we might see, this pivot towards much more fiscal spending, which could raise concerns for the long end in the U.S. And that obviously, again, points towards, the weaker dollar. We've seen global central banks trying to obviously diversify their reserves as well, move away from the US dollar. So it does not still spell the end of the US dollar to me, because we know that, 88% of FX transactions, one side is still the US dollar. Even within trade, of course, we've got a little bit more relevance for the Chinese renminbi in this region. But I think globally, again, US dollar continues to dominate in a very significant manner, which is very difficult to overtake by any other, single currency, or even by gold for that matter. So I think the dominance really stays, but at the margin, these fiscal concerns also continue to be a negative for the US dollar next year, in addition to, of course, the Fed rate cuts.
Well, I know you say that while we're waiting on these rate cuts, while we're potentially waiting out an AI pause as well, you like to look for assets that pay you well during times of waiting. So can you give us some ideas in that regard?
Absolutely. I think with the yields, going down as well, especially on the short end, I think it is really important for investors who have parked cash, I think, to understand that, one, your yields are going down, plus two, I think we're also still in an environment of sticky inflation. So that also continues to erode the purchasing power for cash. So I think obviously it is very important to understand where you can get some of those better yields if you are an income-seeking investor, particularly. And in that case, I think it is next year could be a story where we see a lot of these dividend plays, things like REITs, for example, and other income plays very much in focus, given, of course, because of the volatility in AI, you want a little bit of a defensive balance in your portfolios. Because of high concentration of tech names, even in indices, you want to balance your portfolios with something more defensive, but also because, there are income-seeking investors who want to continue to generate steady income also.
Charu, just quickly, if you can, when it comes to currencies, what do you think China is thinking about guiding the renminbi? Because it seems to make sense that it would be stronger. And then how does that square with what India is thinking when it comes to the currency?
Yes, two very divergent parts there, Avril, certainly. I think, so when we talk about China all year, we've seen that intent from China that they do not mind a stronger Chinese yuan now, right? It is a signal for them of a stronger economy as well. And given that, they do want to kind of, be structurally stronger, strategically independent from the global, economy, I think it was very important for them to continue to show that strength. But of course, the pace of appreciation in the Chinese yuan has, I think, obviously given, we got that signal yesterday that that's not something they're comfortable with. So my sense is here that they might slow down the pace of appreciation, but they're not going to potentially reverse it at this point. Whereas when you talk about India, obviously it has been, the Indian rupee has been extremely weak, and that also comes from, I would say, a policy stance or an intent to kind of be a bigger player in the global export or the global trade arena. I think the weaker rupee could help them there, and that might be the intention behind it. But I would say that they might slow down the pace of the fall of the rupee, but I don't potentially see them reversing that trend.
Okay, talking about trend reversals, the yen obviously this year has been coming under a lot of pressure. What is 2026 going to look like? I think part of the outrageous predictions that Saxo has is, 100 to the dollar?
Yes, but just to put it right now, outrageous predictions are not our baseline predictions. It's just something fun we like to do to obviously, encourage some level of debate. But also, I think there is a clear intent to try to look at some of the blind spots in your portfolios. Certainly this is not our base case, and it's not like we are telling our clients that you should prepare for a dollar yen going to 100. But what we've come up with is a set of 10 predictions which talk about the risks that investors might have ignored. So we take the trends that are already in place and we take them one or two steps further to really spark that thinking, what if I am exposed to this kind of a risk in my portfolio, or what if I'm missing this kind of an opportunity in my portfolio. So talking particularly about dollar yen, that is not a trend reversal for sure. That has been a trend that's ongoing for some time, right? We're still very close to these record low levels, despite the fact that we are expecting now, the market is expecting now the BOJ to hike rates later this month. And that goes to say a lot of things. One, of course, that the interest rate differential for Japanese bonds, which are obviously the yields are rising, but still so low that the interest rate differentials to the rest of the world are quite high. And I think that continues to pressure the yen, but also the fiscal situation, again, very much what we talked about for the US as well. Now, we do have an intent to be, fiscally more accommodative, even more accommodative, I should say, in Japan. And that kind of raises, some concerns when you have 30% of, GDP in debt. So I think that kind of does raise some concerns. Again, it's not something that will immediately come to them because a lot of debt is held by the BOJ itself in Japan. But I think it's something that continues to concern investors. And of course, the carry trade itself remains quite attractive still. But things really start to turn if we see Fed cutting aggressively next year. I don't think the BOJ's small steps of rate hikes could really reverse the situation rapidly. But if the Fed really triggers like those 100 basis points of rate cuts and a very dovish policy, we could see dollar yen moving lower in that.
So the key to lower dollar yen rests on the Fed, not the BOJ?
More potentially. I think they have more leverage.
Charu? Great to chat as always. Thank you so much. We'll see what 2026 looks like. Charu Chanana is Chief Investment Strategist at Saxo. We have more ahead on the Asia Trade. This is Bloomberg.
Indian Prime Minister Narendra Modi has rolled out the red carpet for Vladimir Putin, showcasing a relationship that's angered the US and led to hefty trade tariffs. The Russian president is visiting New Delhi for the first time since ordering the full-scale invasion of Ukraine. Let's bring in Bloomberg's Michael Heathner. And Mike, it really is interesting watching this visit because there seems to be no level of concern at all from either leader about how this would be perceived in the US.
Yeah, look, I mean, it's sort of a historical thing, isn't it, with Russia and with India. I mean, the former Soviet Union obviously was a superpower and didn't take instruction from anyone. India's always prided itself on an autonomous foreign policy and was part of the non-aligned movement in the Cold War. So that strategic independence has always been sort of important for both countries. So it is nonetheless interesting to watch, given just how influential President Trump is with his commentary and that sort of thing. But these are countries with a historic and a pretty significant relationship. I mean, the origins of it are sort of forged in war between India and Pakistan when Russia came to protect India when the US sort of deployed to potentially assist Pakistan. So there's a lot of history there, and I think they sort of tap into that. But nonetheless, the influence of the US is significant. Obviously, the US is trying to negotiate with Russia to get a ceasefire in Ukraine. India and the US are locked in tariff negotiations. India's got one of the highest rates in the world because of its buying of Russian oil. So there's a lot at stake here, and it sort of almost depends on the whims of President Trump as to how seriously he takes this, whether it bothers him. It's really just a matter of keeping an eye on his social media feed almost.
Yeah, Mike, so given these negotiations, to what extent might the visit affect the odds that we see a US-India deal, if at all?
Yeah, Avril, I mean, it's quite difficult to judge because on one hand you've had, President Trump has already broken the ice in a way when he met with Vladimir Putin in Alaska when he was, a few months ago when he thought he might be able to get some sort of deal with a face-to-face conversation. And then, in recent days we've had Steve Witkoff, his envoy in Moscow for more talks. And Trump has sort of been pivoting towards Putin lately, but it's reasonably clear that Vladimir Putin is stringing the US along, or stringing President Trump along with lots of talks, lots of fine words, while keeping the pressure up on Ukraine on the battlefield. So whether Trump then turns against Putin and makes India potentially pay for it, or some sanctions on Russia, it's really unclear. But at the moment, he's been quite pro-Putin. So based on what we've seen recently, you'd think he'd probably let this slide by. But you just never know, do you?
All right, Bloomberg's Michael Heath there. Let's get to the top global headlines that we're following. Ukrainian and US negotiators will meet in Florida after Russian President Vladimir Putin signaled that a peace deal was a long way off. Putin told news outlet India Today that the ongoing negotiations are difficult, that Moscow disagrees with some of the proposals put forward by the US. His comments are expected to cast more doubt over President Trump's push to broker a peace deal after almost 4 years of Russia's full-scale invasion. President Trump is reportedly planning to announce progress on the Gaza peace plan before Christmas. Axios says he will declare that the peace process is moving into its second phase and will also unveil the new governance structure for the enclave. The report also says the US is in the final stages of achieving consensus with Israel, the Palestinian Authority, and countries in the region on the composition of the technocratic government. The EU is reviewing tariffs on an electric SUV that Volkswagen produces in China, raising the prospect of relief for the German automaker from the bloc's heightened levies. The review centres on an over 20% duty on imports of the Cupra Tavascan, which Volkswagen builds with a local partner in Hefei. The company earlier proposed an annual import quota and a minimum import price for the model. Avril.
Yeah, Paul, of course, we've been tracking that visit of the French President Emmanuel Macron. He's in China for that 3-day state visit. And Macron has been pushing for more Chinese investment as France looks to rebalance its economic ties with Beijing. And President Xi said China is willing to import more high-quality French products and welcomes more French enterprises to develop in China.
China is ready to work with France, always bearing in mind the fundamental interests of our peoples and the long-term interests of the international community, to overcome various disturbances, adhere to dialogue on an equal footing and open cooperation, ensure that the China-France comprehensive strategic partnership moves forward more steadily and effectively in the next 60 years.
Let's bring in our China correspondent, Min Lo, in Hong Kong. So, Min, what's your assessment of how things went?
Yeah, pretty positive, I would think, just judging from the tone coming out of these state media commentaries so far. It's been heavily covered in China. President Xi calling the meeting candid and constructive and fruitful. There has been a range of cooperative agreements signed covering areas like natural resources, like agriculture, food, education, investments. I think the key focus for Macron is really to deepen trade and investment ties, right? He called for more Chinese investment, saying that needs to be a clearer framework to attract Chinese investments. He also warned against supply chain disruption, and that was likely a reference to China's disruption of the rare earths access for European countries, although some of those restrictions had been lifted. But it spooked many European partners about over-reliance on China. He also urged China to expand its domestic consumption, saying that one of the worst ways to deal with the trade imbalance is to start a trade war. And I think a key focus for him is to correct the trade imbalance, given that France still has about $50 billion in goods trade deficit in 2024.
Min, get us the latest as well on China's view on Japan's Prime Minister Sanae Takaichi's position on Taiwan. She's saying she understands and respects Beijing's view on Taiwan. How is this being received in China?
Yes, she reiterated that Japan's stance on Taiwan has not changed since signing this 1972 communique between China and Japan. But the problem is that that particular communique mentioned that Japan respects that Taiwan is an inalienable part of China, but it stops short of spelling out that Japan affirms and sticks to that one China principle. And so China is not satisfied with her latest comments. China has been repeatedly calling her to retract her earlier comments, and we heard from the Foreign Ministry yesterday again hitting back at her statements so far, saying that, this is not satisfactory, unacceptable, and why can't Japan just spell out its commitments that it has made and its legal obligations. And it's interesting, right, because it's not just about what Japan really thinks about this. You got to think about its alliance with the U.S. There are so many U.S. troops stationed in Japan that would likely be involved in any conflict in Taiwan, and that would inevitably pull Japan into the fold here. You add to that the close ties that Japan has with Taiwan as well, close trade ties, especially semiconductor trade. The two sides just signed a digital trade agreement as well. So, of course, China will be watching all of that developments very closely.
All right, Bloomberg's China correspondent Min Lo there. We have more ahead on the Asia trade. This is Bloomberg. Japanese lender Aozora Bank has carved out a niche by financing leveraged buyouts at a time when Japan is seeing a surge in deal-making. M&A in dollar terms is set to reach the second highest level on record this year. CEO Hideto Oomi told us he expects more opportunities as Japanese firms address governance reform.
I believe the trend will continue. For over 30 years, amid Japan's economic stagnation, the government and the Bank of Japan have implemented various measures to revitalise the economy, including the Corporate Governance Code and Tokyo Stock Exchange reform. These are finally starting to show results and gain momentum. The trend won't stop. I believe it will continue next year too.
You touched upon corporate governance reform, but I'd like to delve a bit deeper into next year's outlook. What kind of M&As do you think will increase? The number of MBOs is also rising.
There are almost no top managers who are not paying attention to capital efficiency. Everyone is seriously discussing what their company should be, both in management or within the boards. This could mean an M&A, going private or other approaches. So I believe we'll see a broad range of these options emerge this year, with some existing ones expanding further.
Aozora Bank CEO Hideto Oomi speaking with Bloomberg's Hideki Suzuki. And Bloomberg has just launched its new Japanese website. You can check it out, bloomberg.com/JP.
Turning now to Chinese tech and its AI chip makers. Cambricon plans to more than triple its AI chip production in 2026, aiming to capture market share from Huawei in China and to fill the void left by NVIDIA's forced exit. Bloomberg's learned the company is preparing to deliver 500,000 AI accelerators next year. Another Chinese AI chip maker, More Threads, will begin trading on Shanghai's stock exchange later on today, following the year's second largest onshore IPO. Company raised about $1.1 billion, a little bit more than that in fact, valuing the firm at about $7.6 billion. More Threads manufactures GPUs and is benefiting from a market share void as well, left by Nvidia's exit. The debut comes amid growing optimism over China's drive for tech self-sufficiency, fueled by trade tensions and fears of US technology curbs. Well, let's get some more on this much-anticipated debut. Bloomberg Asia Equities reporter Sang-Mi Cha joins us now from Hong Kong. So, Sang-Mi, a good IPO for More Threads. Can you tell us a little bit about the excitement building around the debut today in Shanghai?
That's right, Paul. The company is the second largest IPO onshore this year, and it's the most popular one that's over $1 billion since 2022. And that's because we've seen so much popularity that the oversubscription from retail has been 2,700 times. And this is not really unusual for IPOs in China because there has been a lot of boom. But of course, in this specific sector, it's been so hot this year because of the self-sufficiency theme that we have been seeing. And overnight, we've heard from U.S. senators saying that they want to ban AI chips going into China. And NVIDIA's Jensen Huang also said he wasn't sure whether China would accept the H200 chips, even if U.S. were to relax these restrictions. And that's all because Beijing has also been discouraging the local companies to actually use some of these advanced AI chips from NVIDIA. So that's why we've been seeing a lot of these local companies come up and wanting to be the NVIDIA of China. And we've seen similar moves in Cambricon technology, which has doubled this year. And we had a scoop last night about them.
Sang-Mi, we are also on the hunt for some of these new Asian equity winners, right, from the AI trade. Talk to us about what you're seeing, why the shift as well.
Right. So ever since Google's updated Gemini 3 AI model, we have seen some kind of rotation, which was focused mainly on the heavyweights in Asia, namely TSMC, SK Hynix, and Samsung Electronics. And we're not saying that these established names are done. Of course, we need the most high bandwidth memory, and we need more foundry to accelerate these AI progress. But of course, what's happening now is just broadening out of these companies that investors are investing in. So some of these lesser-known names and small caps in Taiwan and Korea, such as MediaTek or Isupetasis in Korea.
Sang-Mi, thank you so much. Bloomberg Asia Equities reporter Sang-Mi Cha. Now, staying on the AI supply chain, the latest stories on data centers. Blue Owl Capital has raised $1.7 billion for its latest digital infrastructure fund, about a year after acquiring a data center specialist. Its digital infrastructure trust also picked up interests in 11 U.S. data centers from affiliated entities in a deal valued at $1.5 billion. The firm is making an aggressive push into the space, providing more than $50 billion in data center financing to Meta and Oracle. Bloomberg sources say cloud computing startup FluidStack is in talks for a funding round that would value the company at $7 billion. Situational Awareness, an investment firm founded by former OpenAI researcher Leopold Aschenbrenner, is in talks to lead the financing, with FluidStack looking to raise $700 million. Sources say Google and Goldman Sachs are also involved. Bloomberg has learned Goldman Sachs paused a planned $1.3 billion mortgage bond sale for Cirrus One after a major outage at one of its data centers crippled CME Group. Sources say early feedback was due November 25th, but days later, CME's global markets went down for more than 10 hours due to a cooling system failure at Cirrus One's Illinois facility. The deal is now on hold, but may be revived in the first quarter. Paul?
Well, let's turn now to another key sector in focus in China. It is, of course, property. We're tracking updates from Country Garden, which has named President Mo Bin co-chair after winning court approval for its offshore debt overhaul. Meanwhile, New World's bond swap plan is set to trim about $1.2 billion from the company's debt pile. But the distressed Hong Kong developer is still facing liquidity strains with one of the heaviest debt burdens in the city. And China Vanke, of course, seeking a one-year repayment delay on a 2 billion yuan note, forcing investors to reassess their positions. Bloomberg Opinion columnist Shuli Ren thinks China Vanke is an oddity with no endgame in sight for its debt woes. And Shuli joins us now. So, Shuli, you've mapped out a liquidation scenario in which creditors are staring at a pretty dismal recovery rate. So tell us, how bad is bad?
So, Paul, I think the China Vanke's dollar bond holders, they can at most get 20% recovery, which is bad. And then there's also a chance that they are getting recovery of as low as 10 to 11%. What's happening there is that those 1.3 billion US dollar bonds, they are not issued by China Vanke, the parent, the developer, but by its Hong Kong incorporated subsidiary, essentially a shell company. And unfortunately, the way these dollar bonds were issued, overseas investors don't have much protection, and all they can get is basically the assets from the Hong Kong subsidiary. And unfortunately, the Hong Kong subsidiary only has 21% stake in warehouse operator GLP, which is worth about $2 billion US. But that asset is actually, unfortunately, also pledged away. So on the liability side, offshore investors, there are about more than $5 billion US of offshore investors' credit. On the asset side, we are looking at just $1 billion. If you just do the back of the envelope calculation, we are looking at less than 20% recovery rate.
That does look bad, truly, but in your view, there could be an even uglier outcome. Walk us through the possibility of creditor-on-creditor violence.
So creditor-on-creditor violence happens when some creditors, which are likely to be the bigger ones, jump the line and do some land grab. And we might very well see that in Vanke's case. So that with the offshore debt, there is the dollar bond investors, $1.3 billion, but also $4 billion worth of loans provided by China's biggest banks. They definitely have an incentive to claw whatever asset that's offshore, right? Because they also have big business with Vanke onshore. They can say, okay, if you don't let me, if you don't pledge more assets offshore, I'm going to cut your loans onshore. So you can see that scenario playing out, especially if Vanke does not go into liquidation now.
So why is Shenzhen Metro, which is its biggest shareholder, ended the year engaged in an informal bailout, but since then has changed its mind?
I think they're just thinking that Vanke is basically an ever-expanding black hole. If Vanke's physical sales could stabilize this year, maybe Shenzhen Metro could continue, right? But what we are seeing is Vanke's contracted sales is on track to decline by more than 40% this year. And what we are seeing is that this hole just gets bigger and bigger. Even SOEs were throwing the towel and say, look, I only have 27% stake, and I am not the majority shareholder, and you are on your own.
Truly, thank you so much. Certainly, we are watching very closely the property sector in China. Bloomberg Opinion columnist Shuli Ren. Now, of course, this has been front and center or at the heart of the Chinese economic tepid recovery. So when you look at fundamentals, it's interesting how we've actually been seeing the Chinese yuan strengthen towards the highs of the year. But we are seeing it giving up these gains now as the PBOC signals come in. To some, they speak to a central bank that's trying to signal to markets that there's two ways to this yuan trade. Meantime, Bloomberg Economics says its yuan stress indicators show appreciation expectations have built up, but the PBOC is likely to stick with a gradual approach. For more, Bloomberg Economics chief Asia economist Chang Shu joins us from Hong Kong. So Chang Shu, what are you seeing specifically in terms of the yuan, the messaging from the PBOC? What is the trajectory as well?
So the yuan has been building up this appreciation narrative over the past few months and intensified in the last few weeks or so. The PBOC will likely to push back. That's what we can expect over the coming weeks and months indeed. The narrative has some validity. There's a macro narrative, there's a de-dollarization trend, and China, because of its development in tech and those specific sectors, could see benefit from the de-dollarization trend, and some economists have suggested a stronger yuan could boost domestic consumption and facilitate the economic transformation. So all those macro narratives have fed into the year-end repatriation trend. Using our own stress indicator, we see that the appreciation stress in the renminbi has been the strongest in since 2021. So it's not a surprise to see the PBOC pushing back. We again, historical experience suggests that the PBOC tends to come out quite strongly when there's one-way expectations. So going forward, we see that the PBOC is still concerned about the growth outlook, and they do not want to see one-way sharp movements. So they are likely to continue to navigate the market to a gradual movement and likely to be in both directions.
Yeah, so that's the reason for the PBOC not allowing a stronger yuan, but the market and a lot of market watchers think it should be allowed to strengthen. What's the case for?
Yeah, I can understand the case. I think indeed there's a lot of validity for it. At this point, I think what we have been consistently focusing on is more flexibility in the exchange rate. So I think in a way the PBOC has reversed its course to gain greater exchange rate flexibility. The PBOC has long expressed the desire or aspiration to have greater flexibility, but it hasn't really let the currency go. We can partly understand that there have been a lot of great shocks to the economy, but the PBOC's hold on the currency has become much tighter than even back 5 years ago. And that's hurting over the longer term. A, you can't get clear market signals. B, that hurts the development of FX market and related markets. So we do see over the longer term there's a need for the currency to have greater flexibility.
All right, Bloomberg Economics Chief Asia Economist Chang Shu there. We have more ahead on the Asia trade. This is Bloomberg.
You're watching the Asia trade, and we are watching India very closely, not just because the Russian president is there on a state visit, but we're also hearing that a U.S. team plans to visit India next week for trade talks, which is really interesting given the geopolitical dynamics, how these negotiations between the U.S. and India could still be underway. But of course, we are also watching India because we have a central bank decision that is due later today. The RBI expected to cut 25 basis points. But then the question is, where do we go after today's decision, given how the rupee has been hovering near those record lows? If you look at this chart, it shows you how inflation, with the line in yellow, is relatively low. And then you look at exports in India as well. And that line in purple, that certainly has been coming under pressure given these tariff concerns. So the idea here really by some economists, market watchers, is that India does have space to cut and does have space to let the Indian rupee weaken despite the bouts of intervention that we have been seeing of late on the Indian rupee. Paul?
Yeah, it's a funny conversation to be having, really, because, inflation's below target, possibly trending down. Growth's really strong. It's above 8%. And you mentioned the weak rupee there. So as to that question you posited, where to from here? Well, maybe the bond market's got a few clues. According to Nomura, the bond market's pricing in another 19 basis points of further easing. That's over the next two meetings, not just this one in December, but also the upcoming one in February as well. So Nomura is saying that given that current pricing and market positioning, we believe that the risks are skewed towards higher front-end rates this week and following the RBI decision. All right, well, let's get the latest now from the corporate front. Meta shares surged in New York after Bloomberg revealed that CEO Mark Zuckerberg is planning deep cuts to the company's metaverse initiative. Sources say executives are considering potential budget cuts as high as 30% for the group next year, and that could include layoffs as early as January. The move marks a significant pullback on an effort that Zuckerberg once framed as the future of the company. Alphabet investors are increasingly confident the company's chips could become a major driver of revenue for Google's parent. D.A. Davidson says Alphabet could capture 20% of the AI market over the next few years if it gets serious about selling its Tensor processing units, also known as TPUs. That would make it a roughly $900 billion business. The success of TPU chips is a key reason for the stock's 30% rally in the fourth quarter, putting it among the best performers of the S&P 500 index. Avril.
Yeah, Paul, we were just talking earlier about how India is really in focus today. So let's get further analysis. Madhavi Arora is chief economist at Emkay Global Financial Services. Madhavi, good to see you. So we are expecting the RBI to cut. I guess the question for markets, for economists, is how dovish of a cut that's going to be. What is your assessment?
So we are looking for a 25 bips rate cut in this policy. I think to a large extent, RBI has sort of given a very soft communication in the recent month where they have acknowledged that there is space to cut. Of course, the timing and the forward communication is actually a more contentious part for us. At this point in time, I think the case for a December cut is quite strong, but we're not ruling out a split MPC where, there could be a split between the members to the extent of almost a 4-2.
So what does that mean for future RBI decisions in the first half of the year in particular?
So it's going to be very complicated, right? At this point in time, what we understand is that both markets and Reserve Bank have, on a repeated basis, gotten the macro landscape wrong. Inflation has consistently surprised to the downside. Even when we adjust for the noisy factors like gold, inflation actually has been trending steadily down. Every projection has been reset by the Reserve Bank. This is going to be the fifth time that the RBI would be setting its inflation projection for FY26. If you look at our own projections for both FY26 and FY27, Reserve Bank will be likely revising down further to the extent of as high as around 60-70 bps for the year. So clearly, there is space for the rate cut, probably beyond December as well. But I think we'll have to see how the growth contours really play out. As of now, as I said, of course, we missed the inflation forecast. We even, lost count of the way we were revising our growth forecast, right? The growth cycle also has been read wrong by the markets to a large extent. And even the Reserve Bank also has been revising it on a regular basis. So we'll see how things pan out. I think factors like rupee movement, factors like the contours of the trade deal that we'll make with the US would play a very important role in deciding how the, policy decisions, both at the fiscal and monetary end, will play out.
Yeah, let's talk a little bit more about this because we just had the news that US officials will be on their way to India to talk about trade. Interesting time to be doing this with Vladimir Putin in the country. But let's talk about the economic side of this. I mean, to what degree is the weak currency really helping India absorb the impact of those US tariffs? And where do you see things heading depending on the outcome of trade talks?
So I think rupee has been a very volatile play in the Reserve Bank's reaction function this time around. The way rupee has depreciated is partly on account of two factors. One, the Reserve Bank probably let it go, and two, because I think it was supposed to go down, right? Given the way we've been penalized versus our Asian peers, it's but natural that the currency would have pressure. It would be a byproduct of reaction function of both a weaker current account as well as a weaker capital account. So I think to a large extent, rupee is just acting as an automatic stabilizer to the macro realities that India is facing at this point in time. And I think the Reserve Bank may not necessarily be too perturbed about it, and to a large extent they have let it go. We are the worst performing currency in Asia since April, and I don't think the trend would really turn around unless, of course, we see a very strong envisaging at this point in time.
All right, Madhavi Arora, Chief Economist at Emkay Global Financial Services. Thanks so much for joining us. And for more coverage on key stories in the region, you can catch the latest episode of Wall Street Week, which takes a deep dive into the unrest in Nepal. Bloomberg travelled to Kathmandu to find out the stories behind the protests and what they mean for the rest of the world. And don't miss that on Friday, 6 p.m. if you're watching in New York, 7 a.m. Saturday in Hong Kong. More ahead on the Asia Trade. This is Bloomberg.
Now, of course, we are watching how Japanese yields have been trending, the expectations coalescing around a hike potentially from the BOJ 2 weeks from now. We've heard from some of these policymakers reportedly supportive of a BOJ rate hike, or at least that they wouldn't stand in the way of the central bank. The finance minister, Katayama-san, saying they'll leave monetary policy method specifics to the BOJ, and they believe that communication with Ueda is going well. Is this enough messaging that we are going to see a hike from the BOJ in a couple of weeks from now? Certainly, we are seeing that playing out in the curve. That's it from the Asia Trade. Our markets coverage continues. This is Bloomberg.